Hi, we're Person in Person, and welcome to your May 2022 market report for Greater Newburyport. So for Newburyport for the month of May, go ahead.
For Newburyport,
I was introducing you.
Thank you.
Yeah.
Newburyport for the month of May, there are 11 single-family homes sold. 1.3% over asking price was the average. Days to offer was 6 days, so things are still going quickly. Average days on market is 21 days, and the median sale was $1,115,000. 3 of those were cash. So
The rest was
conventional.
Yep. 1.3 over asking median amount that over asking that these properties have gone is not a lot in comparison to what we have seen.
Correct.
Over the last, 8 months, which is we usually see anywhere from 7 to 15%. Interesting.
So talk about the condos, because they still had an aggressive over ask. Yeah.
Percentage, yeah. So there were 15 sales for condos in Newburyport, 5 days to offer, 20 days on market. $575 was the median sale price, 4 cash, 2 VA,
Yay.
8 conventional, and then 1 is other financing, and the median over ask percentage was 15%.
15's a lot different than 1.3 on single family homes.
Correct.
Yeah, big difference.
Yeah, big difference. All right, for Newbury, what we got in Newbury?
In Newbury, little old Newbury, we have 7 sales.
Wow.
Average of, that's a lot for that little town.
That's double what it's been, right?
Yes, absolutely. $950,000 was the average sale price. Days to offer was 8. Days on market was 21. 5 conventional, 2 cash, 3% under list price.
Was the average.
Yeah, so things are changing a little.
You might be thinking, wow, this is the only town that has a 3% under list, so a 97% list to sale ratio, which is actually standard during
It's more
normal times. There were a couple of big properties that were significantly overpriced that ended up selling for less. Not all of them sold under list price. It's important
It's
to
an
note.
average.
Right, it's an average. West Newbury.
Yeah, West Blueberry, as I used to call it. Sweet little West Newbury. There were 4 sales.
Triple what there were last month.
Triple, yeah.
Quadruple, actually, because there was one.
Yeah. They were all conventional loans, so less of a cash market. I think it's more of a bedroom community, and that may play into it. There's probably less empty nesters and more families moving to West Newbury. The average price was $647,500. Days to offer were 4.5. Days on market were 18. So that's pretty quick. They were selling quick, and they sold for
15%.
I thought it said 1.5. 15% over ask. So that market remains hot.
I mean, there's so little inventory, and people are desperate.
It's a small sample.
Yeah.
It's a small. So, Rachel, why don't you talk about Amesbury, single family homes first?
Yeah, Amesbury. 8 sold. $618,500 was the median sale price. 4.5 days to offer. 15.5 days on market. There were 7 conventional loans, 1 private financing. It was a gut rehab, so I'm assuming that was like a hard money loan or something like that. And 15% over asking. Now, I just want to say this. When Amesbury has a higher over asking percentage than Newburyport.
Yep. It's a big deal.
Yeah, Amesbury for the 2nd month in a row is
smoking
hot.
Smoking hot.
Very desirable market right now. Lower price points, which obviously is driving the demand. But wow, Amesbury.
Yeah.
Coming in hot.
So, Rachel, how about condos in Amesbury? What was the story there?
Yeah, condos, 17 sold. That's the largest amount, I think,
a lot of condos.
All of the towns that we've covered. $425K was the median sale price. 7 days to offer, 15 days on market, 2 cash deals. The rest were conventional financing. 10% over asking.
That's a substantial amount when you consider the price range that we're talking about.
Yeah,
so to a buyer,
for sure.
$450,000, 10%.
10%, $45,000.
That's a lot, particularly to someone who's just starting out.
Yeah.
Or a family. It's a lot. It's a big upgrade.
Big chunk.
So then, Then
Yeah.
There's breaking news. Sorry, had to do that.
Yeah, interest rates, man. Yeah. 6% nationally.
Just came across the wire seconds before we turned on the camera. And over 6%. I think as per usual, if you shop around, particularly to portfolio local lenders, if you've got a good credit score, you can do a lot better.
So in terms of what we're seeing right now, what are we seeing right now?
Well, we're a few days away from the first day of summer. And traditionally in New England, we have had a seasonal real estate market. We touched on this about 30 days ago, but we're seeing it even more so now that graduations are done. People are starting to go on vacation.
School's almost out.
Later in some communities, but that will decrease the demand because we all need a vacation after 2 years of not being able to go anywhere.
Yeah. Mm-hmm.
As long as your flight doesn't get canceled and you can afford the gasoline, you might be going on vacation. We are seeing an increase in staycations, but those people still don't want to be looking at real estate if they're taking a week off with their family. So a little bit different, a little bit more in keeping with our traditional year, where in February it would slow down and in July it would slow down. But one key factor on that we always checked in the past years when we saw that seasonal was that the listings would actually go like this through the year. Mm-hmm. But if you track the closings, they were pretty steady.
Yeah.
So there's less for people to choose from. The days on market are going to be a little longer. Mm-hmm. It's going to be a little different. We are starting to hear from people, we're going to put our place on in September. So that was the type of thing we always used to hear. So Rachel, tell me, is there anything else that you've seen as a sort of red flag, new thing in the market recently?
Price reductions.
Yep.
I have not seen a price reduction in like 2 years. No. I mean, we've seen them here and there, like one property here, one property there. But there are, I want to say like 6 or 7 properties that are in the million plus range in Newburyport that have seen price reductions. Yeah. The days on market for those properties is also about like 12 to 17 in some cases, and these are not new construction. New construction, we see long days on market, but these are houses that I would have, a single family, a block from downtown,
ready to go,
move-in ready with parking and a backyard, and we're going on 2.5 weeks it's been on the market with a price reduction. 2 months ago, that would not have been the case. Buyer demand is definitely down. That's 6% interest rates. You're going to lose buyers in the market.
Right.
However, there are plenty of buyers that are still out there, especially cash buyers. What is happening with buyers, though, and we've seen it a lot, is they're not as eager to pull the trigger as they were before. They are saying, I really love this property. They go to look at it at the open house, and they're like, yeah, I think I'm going to see what happens over the weekend, see if it goes under agreement, and if it doesn't, then maybe I'll make an offer. That's what we're starting to see. And now more than ever, you need an agent who's going to list your property at the appropriate price.
Right.
Because we are not in funny money territory. And I mean, it still is to some degree, but the listing price has to be aggressive.
It has to be something that makes a buyer say, wow, I don't want to miss that.
Yeah.
If it's a reach number, then you're not going to see it.
I would say also that this, price reduction is not applying to every town, every price point.
No.
Certainly is not. It is completely property dependent.
Specific, yeah.
Yeah, price specific. Because I just put one under contract that was listed at almost 1.8 and it had 3 offers and they all had escalation clauses. It really depends. You put in an offer for a client in Amesbury and there were 6 offers and ultimately cash is what did it.
But that was in the 300s.
That was in the 300s.
Market. I was surprised to see cash in the 300s. So that was sort of an eye opener. Typically with the lower priced properties, they will all have mortgages, but that's not what we're seeing. Yeah,
the only exception I would say to that is, the condos on Woodman Way, oftentimes those go for cash because they're investors looking to gain rental properties. Something that's really low entry level. So
oh, sure.
Yeah, so that we do, I wouldn't say the market is slowing down. I like to say it's shifting.
Yeah, I think that's fair. It has a different flavor to it. there's no desperation. There's no blood in the water. There's no blood in the streets. Everybody is fine.
Yeah.
But we've seen appreciation every single month for 18 months. And so now that may slow a bit.
Yeah. I mean, because it's not, 15 to 20% appreciation year over year is not sustainable. I think it's projected that we'll see like 5% or 6% this year. I'll put the little chart up on the screen from Keeping Current Matters. But it's not going to be this outrageous acceleration that it once was. No. And that was the point of the raise in the interest rates, obviously. Yeah.
But, we've got a lot of volatility in all the financial and social markets.
Yeah.
So stay tuned, because we'll always be giving you new updates and we'll always be giving you real information.
Yeah. Thanks so much for watching. We'll see you next month.
Thanks.